Hello everyone, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, let's do a quick system check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Just waiting on a few more responses to make sure everyone's up and running fine. If you would, please type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know in the chat box. One thing to keep in mind, as always, each and every trade that you take has risk involved. And the flip side of that, obviously, is each and every trade that you take also has the potential for nice profits, which is why we're all here. But as we go through the Web Trader platform and the AvaGo mobile app, we'll go through some nice tools that are available to help you with your risk management as you think about your plan moving forward. And keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick, I know there's some newbies that attend the webinars from time to time, and so we'll go over for a minute here what exactly is technical analysis before we get on the live charts and get into the live strategies. It's not so complex. Basically, technical analysis is looking back at the historical movements on usually candlestick charts to look for predictable patterns and movements that have happened in the past that may lend some predictability to future movements. And so while the past is no guarantee of the future, it certainly is helpful to many traders to get an idea of those patterns and make use of them when looking for advantageous entry points and exit points for trades. And there are different ways to do technical analysis, and one way is through manual methods. And that's the typical way that we're doing the technical analysis in my webinars. And the reason for that is so you understand what it is the candles are doing. You draw your own support levels, resistance levels, trend lines, etc., rather than relying on an indicator, which is the other way to also get technical analysis done, rather than relying on an indicator to tell you when to buy and when to sell, which is still okay as part of your trading strategy to have indicators involved with your plan and to maybe solidify what you're already thinking. But it makes sense that you also should understand what it is the indicators are looking at, which are the candles that you can learn how to read yourself as well. As we go along, if you have any questions, if you want to give any input, please feel free to do so in the chat box. Now, even though it's a technical analysis webinar, it makes sense to understand fundamentally what's happening in the news so you can get a feel for which way is the wind blowing, so to speak, before you start doing your technical analysis, because you might have a preferred direction based on the fundamental situation before you start looking for price levels that look nice on the charts. And in that manner, you can be a bit smarter than an indicator maybe, where you prefer maybe the support level over the resistance level or vice versa, because you have an understanding of what's going on fundamentally as well. So if we start to look, it only takes 5 or 10 minutes. We'll look at some quick headlines. Western leaders discuss tougher action on Russia. Okay, so maybe even more sanctions coming on Russia, which as you look at the headlines then, shares and oil volatility ahead of NATO, Russia, Ukraine summit. Because they're discussing things that could cause more tension in the world, like further sanctions, now there's volatility starting to hit the market. That's what this headline is telling us. And it's hitting the shares, so the indices and the stocks, and also the commodities like oil becoming volatile again. European shares subdued as Ukraine worries deepen. So we start to see a trend in today's headlines. And if you looked just an hour ago, the headlines were saying European shares rise with some optimism. So you see how quick things change and why it makes sense before you do your technical analysis to look at the headline, see what's going on fundamentally, then go in and do your technical analysis with a knowledge of what's happening right now in terms of the fundamentals. And so we start to see that maybe there's some worries, some fear on the market after a bit of rising that occurred today. And we can see here on the US futures, they're green. Okay, so there was optimism today, but the headlines have started to swing as this summit is going on with the NATO nations. And so the US dollar is actually strengthened a bit today, which is a sign that there's some fear on the markets, even though the volatility index is still slightly down. And it's possible that could creep up as the day moves on. Another headline that might be creating some negativity: UK private sector reports record price hikes. Confidence down with PMI. So the purchasing managers index shows there's some drop in confidence while record prices are soaring in the UK. And so again, we all know there's been this worry about hyperinflation. Well, guess what? That worry is still there, especially in the UK, with the private sector reporting record price hikes. Okay, and so we start to look at the economic calendar then, and we say out of the European Union, we see PMI numbers higher than expected. Now, usually that's good news. If you think about it, usually purchasing manager index, if it's higher than expected, usually you say, oh, the economy's doing well. That's great. But the problem is, because of the hyperinflation, the higher these numbers are, the more worry there is that that high demand, which usually is a good thing, is going to result in even more price increases, more hyperinflation. And so it's kind of bizarro land where what used to be viewed as good numbers, and you see they're listed as green, which usually means positive, is being viewed maybe as negative because of the hyperinflation implications that are involved. And if we look back at yesterday, we can get a feel for things as well. Out of the UK, CPI data, year over year CPI, over 6% inflation. That's consumer pricing index. Those are the prices that you and I pay to buy things. So if consumer prices are up more than expected when there was already fears of hyperinflation, what does that tell you? Okay, more fear maybe of inflation. And as we go down, we look out of the US. I think this is a big one. New home sales. That's a 3-star announcement. That's a high level announcement. New home sales missed the mark. Prices have been rising so fast on homes in the US that all of a sudden home sales are missing the expected mark. So maybe this hyperinflation is starting to take a toll as well as we look at some of these numbers. So as we go through those headlines, before we get on the live charts now, you probably have a feel for, is there positive sentiment right now or negative sentiment? And it feels like there's been a swing from earlier this morning. The positive sentiment starts maybe to look a little more cloudy with that quick fundamental review. And so, and you can obviously interpret it differently. This is the view that I see from that information. And the key here is not for me to tell you what you should think, but to show you the process of maybe something that would be helpful for you to get an idea of what you think before you start trading with the latest news. So let me expand the mobile app. I think it's important that you know how to use all of our tools. And so if I go to a full screen view showing from my phone, and this is the AvaTrade Go mobile app, and it's very helpful for your technical analysis, which is what we're looking at with the advanced tools that are available on it, as well as for fundamental analysis as well. There are some advanced tools. Now, what you'll see is you're able to trade on both your MT4 and MT5 accounts using this app. And so it's a very cool system to be able to use with all of these tools on your MetaTrader accounts. Now, if I click on this tab here, it brings up a menu that has, among other things, some advanced features that you can use. Market Buzz, that would be for a fundamental news day. Market Buzz is based on strictly on stocks. It gives you information of the most up-to-date articles coming out from the internet, so you can quickly do your fundamental analysis on different stocks that we offer. So that's something that we tend to look at during the fundamental analysis webinar. It's a very cool feature and very useful for your fundamental analysis. Now, if we look at featured ideas or analyst views, we get up to the minute signals coming in with all the technical analysis done for you. So if I click on analyst views, now that we have an understanding already of what we think fundamentally is happening, so now we can look at, well, what are the professionals from Trading Central telling us about expected movements? And so if we look at some of what's happening here with the signals, we see GBP, JPY expected to go up intraday, Australian JPY expected to climb, etc. So as you look through, then you want to look for a signal that you think makes sense for what we looked at in terms of the expected fundamental situation as well. And so maybe I look at something like Euro GBP and I say, wow, there was a record price increase. We just saw those numbers out of Great Britain. And we understand that if prices are rising at a record rate for a country, it means their currency is getting weaker. You need more of it to buy any one item. That's why prices are rising, because the currency, it takes more of it to buy the same thing than it took to buy yesterday, right? So that means the currency is getting weaker. And so if those fundamentals align with the signal, then maybe you say, wow, I'm interested in this signal because I expect the pound to weaken with that news I just saw today. So then I tap on the Euro GBP example, and the technical analysis is done for you. So you can see the support level drawn here with the blue line. And what is a support level? It's where a price where a price level where the price had trouble dropping below. And so you see here on the candles, support, the price keeps bouncing back up. Again, it hit here and bounced up. And so as it pulled back, the signal was, hey, it looks like a good buy, both because of the technical analysis support level holding, and these are 30-minute candles. So this is recent movement. This signal just came out a little while ago. And so as what they're telling you in the signal is the preferred direction is for this to rise up towards 83.70. And so they're saying as long as the movement is above this support level, that it didn't break below that support level, that's the preferred direction. And the green lines are the take profit suggestions, to take profit at the next resistance levels, which is this old support level over here. So the technical analysis makes sense in the signal. And if you think it makes sense with the fundamental news that you just looked at, then if it's still within this price range, you might think about buying on this with that signal, with your stop loss below the support level potentially, and your take profits maybe at the suggested take profit levels. Now, they also give you an alternate scenario. They say if the price drops below the support level, then sell. So obviously we could put a pending order below that support level based on this signal and have take profits at the next support levels down here that are drawn on the screen. So the way these signals are set up is for you to potentially do a market move and then also back that up with a pending order for the alternate scenario if the movement completely reverses and breaks, in this case, the support level, which would trigger a pending order that you could program to trigger to sell down here. Okay, so the idea here is going with what you know with the preferred direction, but preparing for the unknown, because we all know the news can change in a flash. The headline could come out that swings the market, and so you've got your risk management built in, maybe with a stop loss on your buy position in this example, and you've got the pending order ready to react if it confirms a breakthrough of the support, which would be confirmation of downward momentum. Type OK if you're with me in terms of how to analyze this type of signal. And you don't have to agree with this signal, but they're there for you, and the price levels, that work has been done for you to outline the support, resistance, etc. And if you have any questions, let me know. Now, we could go on and look at other signals, including cryptocurrencies, by the way, come in with these signals. But let's switch and go to maybe a full screen view on the web trader. So what I'll do is I'll leave the screen share on my mobile app, and we'll look at some more features which are also on the mobile app, but we'll look at them on the web trader. And so what we can do is log into the web trader simply by clicking log in up here. And that takes you to a platform that looks like this. Now, with regards to the functionality of this platform, it has the same features I just showed you on the app, and also the additional features that the app has that we're about to look at. Trading Central, there it is. Forex featured ideas, analyst views, market buzz. All of those features are there. Now, we talked a lot about the fact that there's hyperinflation right now, and maybe with the headline out of the UK about record high prices, and we saw the PMI and the all these different data figures coming out on the economic calendar that show higher than expected numbers. Maybe you're thinking about investing in gold, perhaps, that's related to inflation, typically as the #1 safe haven investment when there are inflation fears. So what we could do is, and you see how easy it is to search on this platform compared to the MetaTrader. You can find exactly what you're looking for really quickly without having to scroll through the whole list. And so if I want to buy or sell on gold, I can do my analysis, and you see some price levels from the past webinar that we did earlier this week. By the way, if we look at the history, a lot of what we went over worked out pretty well on those gold moves. Now, if we're looking at 4-hour candles, we can see that gold has been climbing back up. Makes sense, right? There are inflation fears. Gold has pushed back up near 1950 price level. And so then we might go to larger candles. And if we look at larger candles, you say, okay, there was an uptrend, but boy, it reached a resistance level, didn't it? And so let me get rid of some of these old lines. We'll get rid of some of these lines and we'll draw some new ones with our current thinking. And so as we look here, here's the resistance we saw on the 4-hour candles. And if we follow it across, we see indeed that's resistance further back on the 1-day candles. So you see how this works with the technical analysis. It's not just random that today's movement slowed when it reached 1950. When we start to take what I like to say an inside out look, where we looked inside at the smaller candles, now we start to look outside at larger candles to see the bigger perspective. You see that there's a reason why today's movement slowed down right here. The day before, that was a resistance level. Back the week before in the 1-day candles, it was a resistance level at that price. And if we go back even further, you see here on the 1-day candles, it was a resistance level before it broke above and became support in this area. So this is an established resistance level. And so if you felt that there was reason for the US dollar to strengthen right now, if you think fear is going to hit the market right now because of the, let's say, the Russia-Ukraine war that's going on, that the conflict will escalate, and you think, wow, that actually could create some economic fear, strengthening the US dollar and maybe lowering the expectation for further inflation. If that's how you feel, and I'm not saying you should, but you can see that this is a pretty solid resistance level because it's been there for a number of weeks. These are 1-day candles. So for limited risk, you understand you could be wrong, right? But for limited risk, I can sell off this resistance level, get my stop loss above the 1-day candle resistance without having to risk much, and go after a much larger profit with even taking profit before it even has to break the first support level down here. I could take profit down here around 1940 and have a small scalp move of $6 or $7 potential profit and only risk $1 or $2 with my stop loss above this resistance that it's running into right now. And that's more of a short-term trading strategy. Now, we also, at the same time, instead of putting a stop loss, could say, you know what, I think it could break through, but then come back down also because there's so much volatility. And if that's the case, then maybe you say, you know what, I'm better off using something like AvaProtect instead of a stop loss, because I don't want my stop loss to get hit and then it drops. And I don't want to have to put my stop loss really far away to prevent that, because then I have to risk more. So a solution to that that's unique to AvaTrade and specifically unique to the web trader and AvaTrade Go is once you've got your technical analysis done, you can say, I prefer maybe on my short-term move to do AvaProtect instead of a stop loss. And then we'll look at the long-term move as well, and maybe we prefer to use a stop loss then. And I'll show you what I mean on that. So we could protect by the hour, we could protect by the day. It's up to you, the time period that you'd want to protect. Maybe it makes sense to you to protect for a couple days and say, listen, it could gold could push back up, but eventually I expect it to come back down below this price point. And if that's how you feel, then this might make sense. And now we start to look and say, maybe I want my take profit right on this support level down here in this area. And if that's the case, then I start to say, take profit, let's program it. And what's nice about the tools on the web trader in our app is once you've got your technical analysis done and you're putting your take profit, your stop loss mark where you prefer it, it's calculating your possible profit and your possible loss for you in the order window before you place the trade. So I might say 1938 is my support level down here where I think it'll hit and maybe break through, but then maybe I'm more confident it'll reach this support level at least in the next couple days. And if that's the case, then I'm putting 1938 as my take profit. And my stop loss, I don't need right now, right? Okay, so now I say, how much am I willing to risk on my trade, per trade, or what am I willing to spend on the protection? And maybe I have an account of, I don't know, 25,000. I'm using a dummy account here. It's not a real live account. So I'm gonna make up a balance. Let's say I have 25,000 in my account and I know I wanna risk 1%. So I'm willing to spend $250 on the protection per trade, or to risk that much to my stop loss per trade. And you would have your risk management figured out for your balance and the amount that makes sense to you to risk per trade or to spend on the protection per trade. So now I start to adjust the lot size. If I put half a lot, the protection costs me 193. So I say, okay, I can put more, 0.7. That's a little more than I wanted. It's 270 instead of 250. So 0.67, 0.65 or 66. And now I'm right on the mark I want, almost exactly 250. The protection will cost me. My potential profit is more than double that. Okay, potential profit 521 with that setup. If I like that and the risk management makes sense, then I buy or I sell. In this case, I accidentally bought. We should be selling. Actually, it didn't let me because the price didn't make sense. So that's another feature that helps you out. If you accidentally had it on buy instead of sell, it won't let you if the prices don't make sense. So I've got it on the sell, 2 days protection. Let me set this up again, really easy. 1938 was the support level where we were saying to take profit. Stop loss, we don't need. And the protection, 2 days, and now we just put our trade size again. Okay, and so let's go and put the proper trade size. And so once we get the trade size we want, then we see the cost of the protection, 212 or 226, 241. So there's the trade size I want, about 255. And now I look at my technical analysis and I might say, you know what? I want a larger potential profit. So now I start to slide this down because the protection is costing me more. And in 2 days movement, we've all seen gold move $100 in 1 day, right? Even in a shorter period of time. So it could happen within 2 days. So if I go down and I say, I only need it to drop to this support level down here, which is a pretty nice support level, and this is a recent support level that it might easily break, right? And if that's how you feel, you're looking at your support level down here saying, take profit maybe down here at 1917. AvaProtect for my couple days. And now I start to adjust my trade size for that setup. And I go back to my risk of around 255, the cost of the protection. And now I see I've got double the possible profit. So now you see how it helped me with my risk management. It helped me with a potential mistake I was making, accidentally buying or selling. It makes sure you've got it set up the way you want it before you can buy or sell. And now I've got my price level where it makes sense to me for my risk management, larger potential profit maybe you're looking for than what the protection costs. And once you have it ready to go, now I sell. And you see how the system made sure I set it up the way that I wanted it, even when I didn't notice that it was on buy instead of sell by accident. So maybe some suggestions if in the chat box you want to suggest an instrument that you're interested in looking at that we could do some technical analysis on. or any questions that you might have about AvaProtect or anything else that we went over. Oh, okay, great. I see a suggestion for Ethereum that popped up first. Now, I know not everybody around the world with us can trade on cryptocurrencies, but the strategy can still make sense. So I know some regions don't allow cryptocurrency trading, but let's go through it. And then if we have time, we can look at one of the indices that have been suggested as well, the FTSE maybe, or the US 30. So let's look at Ethereum. And we see on the 1 hour candles a rise in Ethereum. And this actually has been the case kind of across the board in recent days with the cryptocurrencies. After a really large pullback, and if we want to look at the technical analysis on, say, the 1 day candles and scroll back, we see this large pullback in the cryptocurrencies. And that really began with this whole ramping up to this Russia-Ukraine situation that's going on, the fear of hyperinflation as well. Prior to the war situation was getting folks rushing out of what's viewed as maybe riskier instruments to invest on and going into maybe some of the safe havens. And so as we saw gold reaching record highs, we saw the cryptocurrencies and the major indices and stocks pulling back. Now, a lot of that fear seems to have subsided or calmed down a bit. And so we've seen a basement reached on the 1 day candles down here, which I can draw. A level of support down around this area on Ethereum, okay, on the 1 day candles. And then if we're looking for longer term type moves, and since we looked at kind of short term on gold there, we'll look maybe bigger picture here on Ethereum. You see the recent high not that long ago is up above 4,800. Okay, and we're down at just over 3,000. So if you were doing a longer term move, thinking the fear of all of this hyperinflation may start to die down as interest rates are increased and monetary policy is being adjusted, and perhaps folks feel safe again to go back into the cryptocurrencies and the indices and the stocks that they rushed out of with all of the hyperinflation fears. And so in the short term, maybe you feel, sure, Ethereum could pull back down some. But in the longer term, maybe you feel that this should have no trouble going back up. And if that's the case, the technical analysis is on your side then, because you could get your stop loss below a major support level down here, get it down below these wicks maybe, down here with your stop loss, and you could take profit on a much larger potential profit up here if without even having to break the recent highs that it hit late last year, okay? So if we start to program this, we can look at, if I was going to take profit up at 46.80, 46.80, and I put my stop loss below this support level, down here below this wick, maybe down at 21.80 even, would get below these little wicks, this support level. So take profit, 46.80. It reset on me on its own, no problem. And stop loss, 21.80 or 21.70 to get below this support level here. So if it breaks this support level, then hey, something turned bad, and maybe that's a spot you'd look to get out of a buy position potentially. So we start to look and we say, I've got about double the potential profit, close to that, compared to what my possible loss is. And again, then you go back to your risk management and you adjust the trade size for the amount you're willing to risk per trade or per instrument class, etc. Okay, and on a longer term move, maybe you're willing to risk a different amount than short-term scalp trading. This is all up to your risk management strategy. So very simple to set things up with your risk management and to do the technical analysis when you're using the web trader and the app. Now there were some that wanted to look at some of the indices. So if we look at maybe the US 30, and this will have to be the last instrument we look at because we're about out of time. What we can do, if we're looking long term, we can look at, say, 1 week candles. And we start to, let me get rid of some of these old lines. And what we see in the bigger picture is there certainly was a pullback, but there's also been a recovery. And we see this bounce back up. And there's actually some resistance here, okay? If you look back at this level here in the 1 week candles, resistance, 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 before it went above and topped it and then came back below. Now we see it's back at that level and having trouble breaking that price level today. It came up near that and pulled back this week, was near that level. So if you're feeling like the renewed fears that we saw in the headlines today could work against this bounce that came back up, then maybe you're viewing this bounce up as an opportunistic spot to short the market with a potential take profit if the fears are being renewed with what's going on with the NATO summit, with a potential take profit back towards this support level down here that it was at last week. Okay, it was down in this price level. So you don't have to risk much to get above this resistance level, depending on your trade size, compared to the ratio of how much your potential profit could be if it does pull back down towards this support level. And we all know the fundamental news could work with you on that, with the war situation and the fears of increased interest rates coming soon in the US and other places, which tends to pull indices into a little bit of a bearish move, at least temporarily anyways, if interest rates are feared to go up sometime soon. So that's the look on that within somewhat of a short-term view. The longer-term view is at some point, the move could eventually try to challenge the high that it was at, the all-time high. But you might wait for a better price point if it is going to pull down with a pending order down here, maybe to buy. Could be a thought from the technical strategy here. Okay, this will be a good spot to stop, I think. Are there any last questions before we end things? And I want to point out, I know you all are watching this live, but on our YouTube channel, if you're watching this as a recording, or if you're watching any of our recorded webinars as a recording on our YouTube channel, there's a red subscribe button on the bottom right. And if you click on that and subscribe, you'll get a lot of updated market information from everything we go over from everyone's webinars that are on our YouTube channel and from all the market information. You'll receive that regularly. So you could use the subscribe button on our YouTube channel as well. All right, everybody, I don't see any new questions popping up. Thank you for joining. I believe you'll see some really nice movements today. Keep an eye on that NATO summit and the headlines coming out. And I think maybe putting some trip lines in the market for potential pullbacks and breakthroughs could be a smart idea today with some pending orders. All right, everybody, thank you for joining. Till next time, good luck with your trading.